Yo, what's up, crypto community? Your man, Mr. X to the O to the L to the U to the show, Mr. Solution. So on today's episode, we'll be looking at when not to buy any cryptocurrency. You know, there's this popular maxim that says you buy a support, you say a resistance for the spot traders actually. And if you're a futures trader, you could sell a support and then come back to buy. You could sell at resistance, please, and then you come back to buy a support. Right? This is an established fact. But we want to look at a situation where you are not supposed to buy at support, okay? This is specifically for the spot traders. We want to look at some of the reasons or some of the conditions that you will see that will dissuade you from buying at support. All right, so let's get back into that. But before we do that, if you're new to my channel, kindly hit the subscribe button. And if you love my content, could give it a thumb up, share the video, right? So, because this is basically the only way you'll be letting me know that you love what I'm doing, you love the content I'm putting up, right? So, okay, so let's get into the meat of the matter, okay? Okay, so when not to buy any cryptocurrency. That's the title of this course. That's the title of this video. When not to buy any cryptocurrency. So I've been able to marshal out 4 points, basically 4 points why you are not supposed to buy at support at certain points in time, or 4 points or 4 reasons why you're not supposed to buy into support at some certain points in your trading journey, right? So the number 1 point here is when you spot a lower high into support, okay? When you see a series of lower highs coming into support. In other words, when you see a descending triangle, it's not an ideal time for you to buy into a support. What do I mean by that? Let me use a graphical illustration for that, okay? So basically we have something like this. Let's say we have something like this, okay? This is a high, okay? It comes down again, okay? Makes a low here, comes down again, makes another low, okay? Comes again, makes another low, then another lower high, and another lower high, okay? And another lower high. So chances are that at a point in time, this thing might now move to the extent that we break through the support, okay? Because if you plot this, we have something like this. If you join these troughs together, we have something like this. Then you join these peaks together, you join everything, okay? This is actually what? This is actually a descending triangle, okay? So when you spot these in a trade, this is actually, this is a resistance, okay? And then this is a support. So when you spot this kind of charts in your trade, it is not ideal for you to buy at support, because chances are that it will definitely break through that support. It's really not, there is no guarantee that it will happen, but then chances are, because, you know, in trading, we are dealing with a case of probability. It may happen, it may not happen, but then we want to tilt our bias to the areas where we know, to the point where we know we have a higher chance of surviving, all right? So whenever you spot a series of lower highs coming into a support, you know, see this is a high, you see another lower one, another lower one, another lower one, and then another lower one. So whenever you spot a series of lower highs coming into a support, it's not ideal for you to buy into a support, right? So that's point number 1. Because but if you look at this thing, what this thing gives us, what this chart pattern gives us, is what is a descending triangle. A descending triangle is formed when you see a series of lower highs coming into a support. This is a support level, then this is a resistance, okay, coming into a support level. This gives us what? A descending triangle, okay? A descending triangle, okay? This a descending triangle, okay? So let me erase this, then we go to the next point. Okay, then that's point number 1. Then point number 2, when you are not supposed to buy at support, is when you see higher time frame in a downtrend. When you see that the higher time frame in a downtrend, as a matter of fact, as a trader, you're not supposed to trade off one time frame, right? So you combine time frames so that you can have a broader view of what the market is doing. What higher time frame does is that it gives us a projection, okay, a futuristic projection into what the market is saying, what we will likely see in the higher time frame, what we likely see in the future. So if you're trading off the 15 minutes time frame, you are supposed to combine other higher time frame. It could be 1 hour, 4 hour, or thereabout, but just make sure your combination is right, okay? If you are still not sure of how to combine the time frames, I can also recommend you to watch the previous video I did about how to combine various time frames. I used the method I learned from Alexander Elder. He called it the 46 factor of how to combine various time frames. So when you are trading, let's say, off the 15 minutes time frame, and probably is in an uptrend, and then you go to a higher time frame, maybe 1 hour, and then you see that 1 hour is in a downtrend, you are not in any reason supposed to buy at any point in time. You're not supposed to buy because the higher time frame is going against the lower time frame. And then remember that markets, what lower time frame does is that it just gives us the present outlook of things. We'll always look out for the futuristic implication of whatever step we are taking. So that's why it's always expedient that you consider the higher time frame so that you cannot give you a broader view of what is expected to happen. So whenever you are trading on the lower time frame, and let's say it's in an uptrend, and then you go to the higher time frame and you see that it's in a downtrend, you're not supposed to buy at that support, because chances are that if you eventually get to that support, it's definitely going to break lower than that. You're going to break below that very support. Okay, eventually that support could become a resistance. So when a higher time frame is in a downtrend, and then the lower time frame is in an uptrend, you are not supposed to buy at support. All right, so that's point number 2. Then the third one here, he said, whenever you see a multiple test of support, whenever there is a multiple test of support, picture this. Let's say you want to gain access to your house, and then you misplaced your key, and then you get a hammer. Okay, you get a hammer, with the hammer, you're hitting it at your doorknob. You want to break the key. If you keep on doing it, chances are that doorknob will definitely break, and then you gain entrance, okay, to that door. So it is also the same thing that happens whenever there is a multiple test of support. It's usually said that, okay, the more times a particular level is tested, the more significant it becomes. Some other persons say the more a price level is tested, the weaker it becomes. I want to go with the notion that the more it's tested, okay, the more significant it becomes. It's necessarily mustn't break through lower, because trading is a case of probability. It could go to our favor, it could not go to our favor. We want to set our bias to where we know we have a higher chance of survival, right? So as that support level keeps testing that support, time will come when it will have to break through it and then go lower. Let me give us a graphical illustration of what I just talked about. Okay, let's say you have this is a resistance, okay, and then this is a support, right? So price has been moving, making a series of moves. Okay, starting from here, it went up, came down again, okay, got rejected, went up again, came down, got rejected, went up again, came down, got rejected, okay, and then came down again. If it keeps on doing this, a time will come when it will have to go lower than this. And then if you join this graph, if you join this chart together, remember, it leads us to what we had initially. That's when we said a series of lower highs coming into a support, okay? So what this basically means is that this chart actually is what a descending triangle, okay? Because this level here, this is a support, okay? This is a support, this is a resistance. So when this thing happens, when you see a multiple test of a support, this is a support level, and then this support level has been tested multiple times. Chances are that a time will come when you have to break through it. It is not 100% guaranteed, right? Because trading is a probability, charting is a case of probability. So it's not 100% guaranteed, but because oftentimes this is what usually happens. So we want to tilt our bias to the place, to things that we are to an extent sure of. Okay, so we want to tilt our bias to the level where we are at least sure of what is definitely going to happen. So whenever you spot this kind of chart pattern or chart formation in a chart, when you see a multiple test of support, it is not good for you to buy at support. It's the wrong time for you to buy at support. Okay, and then finally, the fourth point why you are not supposed to buy at support is when you discover that you have an unfavorable risk to reward ratio. Okay, when your risk to reward is actually very poor, right? So what do I mean by that? Let's say if you see that if the market goes to your favor, that you stand to make 1%, but if it doesn't go to your favor, your stop loss, you stand to lose like 20%. It doesn't make sense. Okay, it doesn't make business sense. As a matter of fact, when you discover that kind of thing, it's best for you to stay out of the market, or probably look for another trade that has a higher chance of of moving to your favor, right? That has a higher chance of moving favorably to your favor, other than trading the one that you stand a higher chance of losing if it doesn't go according to plan. So whenever you discover that you have an unfavorable risk to reward ratio, it is not an ideal time for you to buy into that support. what I usually do is to probably leave that trade, or maybe wait for the chart pattern to play out, or maybe if I spot another one, or you could equally move to another trade. All right, guys. So this is all I want to share with you. And then to round it off, let me also run through the points we've mentioned again. I said that some of the reasons or some of the times when you're not supposed to buy into support are this: when you discover a lower highs that is coming into a support, and then when you see a higher time frame in a downtrend, when you are trading off the lower time frame, and then your higher time frame is in a downtrend, it is not good for you to buy at support. And then when you discover multiple tests of support, when the support level has been tested multiple times, it is not ideal for you to buy at support. And then finally, when you discover that you have an unfavorable risk to reward ratio, when the money you stand to lose is far bigger than what you stand to make, if you eventually decide to take that trade, it is not ideal for you to buy at support. All right, guys, I hope this has been insightful enough. And if you love my content, kindly share it, hit the subscribe button if you've not subscribed, or maybe you are a new subscriber to my channel, or you're a new visitor to my channel, hit the subscribe button. And also invite you to a community, my Telegram community, where I normally share trading insights. Okay, I'll be leaving the link at the description section of this video. As you can see, I'm spotting out the FTX hood, FTX face cap, right? So I work with FTX, and so far, over a year right now, I've been trading on FTX. So if you're looking for the best exchange that has your interest at heart, I invite you to FTX exchange. Okay, FTX, that's my #1 exchange I'll be working with so far. That's FTX exchange. So I invite you to reach an account with FTX exchange. I'll be leaving the link also at the description section of the video. Till I come your way again, remember your man, Mr. Solution. Hands ahead, salute.